Welcome to another episode of the Forex Edge, your go-to source for market insights, price action breakdowns, and smart trading strategies. Today is March 30th, 2025, and we're diving into the major moves in Forex, key economic events, and what to expect as we head into the next trading session. If you're serious about trading, stay tuned because today's analysis could help you stay ahead of the market. Let's get started. Alright, let's break down today's session. We saw some solid movement in the US dollar index, DXY, which held firm around 104.75, maintaining its recent bullish structure. A mix of risk-off sentiment and strong US data gave the greenback more upside traction. The euro to US dollar pair slid below 1.0800, struggling to find buyers as European inflation concerns continue weighing on the euro. Meanwhile, pound sterling to US dollar saw mild recovery above 1.2600, but it's still vulnerable as market sentiment shifts towards safer assets. Looking at the yen, US dollar to Japanese yen flirted with the 151.50 level before retracing slightly. Traders are on high alert for potential Bank of Japan intervention, especially with bond yields pushing higher. Over in the commodity currency space, Australian dollar to US dollar dipped below 0.6520, following weak Chinese industrial data, and US dollar to Canadian dollar tested 1.3550 as oil prices softened. So, what's been driving the markets today? We had a few major catalysts. US core PCE inflation data. The Fed's preferred inflation gauge came in slightly hotter than expected, fueling speculation that rate cuts might be delayed. The market is now pushing back expectations for the first rate cut to June or later. Eurozone inflation jitters. The latest CPI flash estimates from Germany and France showed a stubbornly high inflation rate, adding pressure on the ECB stance. China's manufacturing PMI. The data slipped into contraction territory, coming in at 49.8, signaling weaker global demand and putting pressure on risk-sensitive currencies like the Australian and New Zealand dollars. Geopolitical tensions. With ongoing uncertainties in Eastern Europe and the Middle East, safe haven demand for the US dollar and Swiss franc remains elevated. Now, let's talk about what to expect heading into the next trading session. Here's what I'm watching. Euro to US dollar outlook. The euro remains under pressure. If we see another drop below 1.0780, expect further downside towards 1.0750. However, if buyers step in, we could see a bounce back toward 1.0830 resistance. Pound sterling to US dollar. The pound's near-term direction hinges on upcoming UK GDP data. If growth disappoints, expect a retest of 1.2570. But a surprise beat could send it back above 1.2650. US dollar to Japanese yen. This pair is a wild card. If US yields push higher, we could see a test of 152.00, but beware of potential BOJ intervention if yen depreciation gets too aggressive. Gold, XAU/USD. With uncertainty still in play, gold could see a retest of the $2,220 support zone before another attempt at breaking $2,250. Bitcoin, BTC/USD. The crypto market remains volatile. A decisive break above $72,000 could open the door for a rally, but failure here might send prices back to $68,500. So, how should traders approach the market tomorrow? Here are some key takeaways. Dollar bulls stay cautious. The dollar is strong, but if risk sentiment shifts, we could see pullbacks in DXY. Watch central bank speeches. Any hints from Fed officials could move USD pairs dramatically. Risk management is key. With volatility high, keep stop losses tight and position sizes reasonable. Be patient with entries. Look for confirmations on key levels rather than rushing into trades. Alright, that's a wrap for today's episode of the Forex Edge. If you found this analysis useful, make sure to subscribe and hit that notification bell so you never miss an update. Also, drop a comment or question. What pairs are you trading this week? Let's talk about it in the next episode. See you next time, and happy trading.